Let's take a look at Disney because shares under a bit of pressure today as weakness in the company's parks division weighing on third quarter results. You're looking at losses of just about 2%. The company's total streaming division turning a profit for the first time ever. Yahoo Finance executive editor Brian Sozzi spoke to Disney's CFO Hugh Johnston about this. Here's what he had to say.
We said we were going to do it in Q4. We've achieved it in Q3. I would expect to see us continue to do that. We were losing not too long ago $1 billion a quarter. Now we made $47 million, and I expect we're going to continue to go up.
For Analyst Reaction, we want to bring in Ken Leon. He is the Director of Equity Research at CFRA Research. Ken, it's great to have you. So when you talk about Hugh Johnston, no surprise, he remains confident in the ability here for Disney to continue this momentum and continue to turn a profit within their streaming division. What do you think?
Well, it's great to be here, and Disney is not participating in the market, as we know. So let me just set the stage. This is one of the premier companies. Hugh Johnston only did a 30-minute conference call with analysts. There's 22 analysts with buys out of 34 analysts. We have a whole rating. The consensus of these analysts is a target price of 122. Today, we lowered ours from 100 to 98. We have a whole rating. And our conclusion is kind of like where we were a year ago. It's extremely difficult to get all of Disney's businesses moving in the right direction for corporate growth. Additionally, moving into a softer economy and a consumer that is watching their budgets, the parks got hurt. And Hugh Johnston can speak to getting to profitability and streaming, but the numbers are very small. So in aggregate, they have a lot of challenges. The businesses are diverse, and I don't think investors really need to look at the near-term opportunity because they can't put all these businesses aligned for positive growth.
Ken, I'm fascinated by that because if the problem is that it's difficult for Disney to get all of its businesses going in the right direction, what solves that ever?
So there's been, analysts saying perhaps there's some businesses that either get downsized or spun off, ESPN, but we know they just paid up. Live sports is so exciting, whether it's been Comcast with the Olympics. So you're going to pay huge for the NBA rights, which they did. And then again, when you look across at the other areas, advertising is always questionable. And parks was really where you hold the line and you're going to spend $60 billion over the next 10 years for parks, some new cruise ships, and you put it all together, shareholders are not getting healthy returns on investment or buybacks in a big way. It's just really challenging against more streamlined companies like Netflix that are really ahead of the curve, in this area of streaming. It's a very tough area to compete. I think the untold story here for the last decade, but really the last year or so, is that advertising has moved to social media, and it is significantly there for Meta, for Alphabet, and for others. And it's just hard to hold on and grow in the traditional areas for general entertainment. So I think we'll have to watch Disney, but I'm highly confident that the fourth quarter that they report is not going to have outsized growth in all their areas for profitability. It's challenging.